Hi guys, welcome back. You're still tuned into Trading Hour, and let's now talk about our brand new series on the IT space. With several brokerage conferences in recent days, we've been getting a lot of comments coming through from key IT companies amid rising demand concerns across the sector. So Rima has moved over to the big wall. Rima, the company you're looking at today is TCS. So take us through what the management is telling analysts.
Thanks so much for that. So, when it comes to TCS, the big worry is its exposure to Europe. Because amongst all the large cap IT companies, TCS's exposure to Europe is the highest at nearly about 30% of its overall revenues. And we all know that there are fears of a deep recession in Europe. There is concern that it's going to impact growth for TCS in Europe, and perhaps next year's budgets could get impacted. In fact, even in the Q1 conference call, the TCS management, Rajesh Gopinathan, had called out that clients in Europe remain watchful. And here he said, and I quote, "Some clients, particularly in Europe, have expressed concerns about the macroeconomic fallout of the ongoing conflict there. But the predominant sense is that technology spending will be resilient. That said, given the macro level uncertainties, we remain very watchful." That's what the management said in Q1. What they're saying right now is that there is no slowdown in demand in Europe, but Europe looks more vulnerable when it comes to North America, and North America will be the driver. On margins, the company has guided that Q2 margins will be better than Q1. So there will be a sequential improvement in margins. Remember, Q1 margins were impacted by wage hike. They also maintain that the Q4 FY23 margins, they're called the exit margins, will be at 25%. So there is a significant improvement compared to the Q1 levels of 23.1%, and the management maintains that. They also said that attrition is stable on a month-on-month basis, even though it still remains above their comfort levels. On individual verticals and the demand outlook, the TCS management told CLSA the demand is stable in financial services, which is about 38% of their revenues. Retail is also stable at 17%, though it is seeing some softness in manufacturing, particularly in Europe, at about 10% of its overall revenues, and life sciences, which also contributes about 10% to their revenues. Back to you.
Rima, thanks very much for that.